We are live. So, Todd, in between our last video that we did for our past clients and people that give a couple of minutes to either watch the video or read a blog, a lot's kind of happened in the particularly in the mortgage industry. Real estate's more of the same, more inventory, less pending. Prices still positive year to date, but trending towards the mean. But really this week, and I guess last week, we had some pretty decent numbers with regards to the consumer price index and the producers price index. And so I'm going to let you jump in on that and maybe give us some good news on rates, hopefully.
Yeah, absolutely. As Rich said, it has been a really exciting week. For the first time in months, we saw a really positive move for rates. Rates, again, are driven by investment into mortgage-backed securities. And, there just hasn't been a lot of appetite previously for them, which has been causing rates to go up. On Thursday, they released the consumer price index numbers and core rate, which is they're both measures of inflation. So core rate basically strips out your food and energy prices, which is something that the Federal Reserve really has no control over. And the year-over-year numbers on those actually decreased. The CPI number went from 8.2 to 7.7%, and our core rate went from 6.6 to 6.3% year-over-year. So, for the first time in a year, we're really seeing some numbers decrease. We're seeing some positive numbers, which means that the Fed's raising of the Fed fund rate is at least appears to be taking effect. This is only 1 month. I mean, future months could be different, but the market responded really positively to that. And we had a 209 basis point improvement on Thursday in the mortgage-backed securities market, which is huge. To put that into perspective,
let me put that into some terms that make sense to people. So, or I should say to the homeowner. When we say basis points, we're referring to like the actual interest rate. And so I think we saw like a 0.5% decrease in rates.
Exactly. Yeah, rates. So your previous on Wednesday, our average rates were up around 7%. Same place they have been for the last few weeks. So we saw conventional rates drop down to roughly 6.61% as of today, and 6.27% for FHA as of today. That is according to Mortgage News Daily, which is a site that aggregates rates from hundreds of lenders.
So if we put that into like, how does that actually apply on a monthly basis? I was kind of crunching some numbers and looking at it, and a 0.5% decrease in rates equates to $500 a month in savings on a $500,000 mortgage.
Yep, that's about right. Mortgage.
Yeah. So that's a big savings for those that are thinking about like getting into the market, refinancing, making a change, whatever may be. So I just thought that was really good. So what else would you add to that? Like, where do you think this is going?
I mean, I don't want to get excited prematurely, but it's a positive move, and it's the first real positive move that we've seen in quite a while. It pushed us above our 50-day moving average. So we look at everything over an average, right? Because there's a lot of up and down movement in the market, but a move that large was very positive. There may be some up and down still for the next few months, but we have been projecting that sometime in the next few months, rates would start to decrease. And we had a large decrease on Thursday. We don't know, it's natural to get a little bit of rebound and see rates go back up a little bit after such a big decrease. But the hope is that we will start trending towards lower rates. So, we'll see some volatility, over the next, throughout the holiday season, I think, of rates going up and down. But, definitely the outlook looks good. And if we do see rates start coming down, it will really help with affordability for people to be able to get into some of those homes that they were right on the edge of.
So speaking of affordability, last time we talked about a 3-2-1 temporary rate buy down. And so on today's agenda, just kind of moving into that, we thought we'd get a little bit more creative and talk about house hacking. And for those of you unfamiliar with house hacking, that basically means buying a property and either renting out the rooms or renting out one side of a duplex or one unit on a multifamily property. So before we kind of maybe tune that out, I mean, like, who would that apply to? I mean, like, who could buy a house that they were going to rent to offset the mortgage?
I mean, really anybody can, but specifically for a lot of first-time home buyers, they, if they don't have a family, and maybe it's a single person or just a couple that doesn't have kids yet, that's looking at a way to get into home ownership, buying a duplex, FHA allows you to buy a duplex, and as part of that purchase, to count the rental income from the other side that you're not occupying as income. So that can really be a good way for someone to get in. I mean, let's say that their payment, is $3,000 a month. Well, if they're bringing half of that in on the other side, it makes the affordability of that home far, far less.
Which is far greater than any sort of like rate increase or price decrease or, probably affordable mortgage product that's out there. So if you have the opportunity or the willingness to consider a house hack, again, buying a house with a larger room count, buying a multifamily home, you're living in one unit or one room and renting out the others, can have a massive impact as far as affordability, building wealth, and really owning real estate. First-time home buyers, VA buyers, FHA, even conventional, as long as you're owner occupied, it's going to be far less than the 20 or 25% down that's required for investment properties. So, if you're thinking about getting into multifamily or even just a single family residence, there's an opportunity to offset your mortgage through rental income. And like you said, Todd, use some of that income towards making your ratios a little bit more attractive to the lender. And so, as always, I'm gonna kind of close this out with, where can they find more information about you? How can they contact you? And I'll do the same.
Yeah, so my name is Todd Phenneger with the Catalyst Lending Team at Celebrity Home Loans. We're on Facebook under the Catalyst Lending Team, and my phone number is 509-944-6206.
Awesome. And yeah, I'm Rich with the Spokane Home Guy Group. And my number is 905. Holy smokes. 509-435-3287. We keep the bloopers in, so it makes us real. We're not perfect by any means. And I'm going to keep going with No Shave November, and looks like you have some catching up to do.
I do.
All right, man. Thanks
All
a
right,
lot.
thanks, Rich.
Bye.
Bye.